Being a break-even trader can be a frustrating place to be. But believe it or not, it's actually a really good place to be also because you're just on the edge of becoming consistently profitable. So in this video, I'll show you some techniques that I've used and I've seen other people use, and have been very helpful in going from break-even to profitable. All right, before we get into analyzing your trading results, you first of all have to have a well-defined and tested trading strategy. So get a piece of paper. I have a trading strategy worksheet on my website. You can download that for free and just fill in all the details about your trading strategy. Give it a name, define all of the parameters, all of the indicators, if you have any indicators, any entry and exit rules, and just have that all written out and well defined so that you know what you're actually doing and you're not really guessing when it's time to take a trade. So once you have that plan all written up, then you test it out and make sure that there's an edge, some sort of a advantage to doing that method. And once you have an edge, then it's time to start trading. And from there, once you have some trades under your belt, I would say, a good 20, 30, it doesn't have to be too many, then you can start analyzing the results. Now, if you have that plan and you've tested the strategy and you actually start trading it and you have 20, 30, 100 trades, whatever it is, and you're just break even and it's not getting close to what you had in your back testing, then it's time to go in there and check out the results and see where you can optimize. All right, so the first step, obviously, in going from break even to a profitable trader is to track your results. This is important. I know it's tedious and nobody likes to do it. I don't like to do it either, but it's necessary because you need to know what you're doing wrong in order to correct it. If you don't know what you're doing wrong, you can't correct it, right? So get a trading journal. It doesn't have to be anything fancy. It can just be a piece of paper. Some people have a physical notebook with a pen. Other people prefer something like Excel, or you can get one of those purpose-built online trading journals or downloadable trading journals, whatever works for you. Try out a bunch of stuff and use whatever you feel comfortable with, and will give you the information that you need to optimize your trading. All right, once you have a trading journal and you have all of your trades recorded, it's useful to have before and after screenshots and write down the method that you were, or the strategy that you're using on each trade. Then there are two things that you should look for. Number one is the biggest losers. Generally speaking, that's going to be the most common reason why people are break even. It's because they do a good job of building up their account and then they have one big loser and it just takes it all out. So if this sounds familiar to you, believe me, you're not the only one. I've been there and I've done that. So looking for your biggest losers can be one of the biggest optimization points when improving your trading. Now, the second point to look at is your smallest wins. And this can show if you're cutting your profits too short and you're not letting them run enough. So analyze those two things and see if you're actually following your rules, or are you cutting your losses? Are you cutting your winners short, or are you taking too big of a loss because you're risking too much, or you're moving your stop loss, or something like that. Step 3, in your journal, rate each of your trades on a scale of 1 to 4. Okay, so why 1 to 4? Well, you can use any scale you want, but I believe 1 to 4 is the most efficient because since there are only four grades that you can give it, the first two, 1 and 2, are going to be inherently, it's not a good trade. And then the other two, 3 and 4, means it was a good trade, but like with 3, you could have improved on a few things. So I think it keeps it simple. It eliminates the middle average grade, which a lot of people will tend to do if they're indecisive. So this forces you to be decisive and say, hey, this was an inherently good trade, or inherently I could have done something better on this trade. And the way you rate your trades is, did I follow the strategy? Did I follow the rules that I wrote down on my trading plan? And if not, then you're going to have to deduct some points for that. So it doesn't matter if you won or lost. The only thing that matters is if you followed the rules, because the rules give you an advantage. And if you don't follow those rules, then you don't know if you have an advantage or not. So that's the most important thing to look for in your trading journal. Step number 4 is, once you have all of your trades graded, then go back in there and take a look at what your trading record would have been if you had followed the rules and if you had done 3s or 4s for all of your trades. So for example, if you had a couple of 1s and 2s, see what you did wrong and just theoretically say, okay, let's say I did that differently and I followed the rules instead of going off and doing my own thing, then what would my trading record have been? And I think many times, especially for break-even traders, there's just going to be one or two trades that you messed up on, and those one or two trades can make your month. It can turn a break-even or a losing month into a slightly positive month, and it can turn a positive month into a very positive month. So it's important to go back and look at those trades, look at how you would have done, and that can really bolster your confidence when it comes to trading, because a lot of people get down on themselves harder on the losses than they do than the happiness they get from the gains, right? They tend to get down on themselves, and that's for certain personality types. But if that's you, then it really helps to go back in there and take a look at what would my trading record have been for the month if I had followed the rules and had 3s or 4s on all of my trades. All right, once you've rated all of your trades and you know what you're doing wrong, then step number 5 is to find solutions to those issues that you're having. So I'm going to go through a list here of common issues that come up with traders who are break even. All right, the first common issue with break even traders is they take a profit too early. They might have a 3R take profit, but then when it gets to 1R, they chicken out and they take the profit because they rationalize and they say, oh, I can't lose by taking a profit. Well, you can actually, because in the long run, the numbers won't work out for you and your winners won't pay for your losers. So you should be trading the way that you tested and the way that you've written the strategy down on your worksheet. So there are a couple things you can do here. One thing you can do is you can have automated exits. And some people think that you need to automate your entire trading strategy, but in reality, that's actually really hard to do because you can't code certain things really easily, and certain things that a human can see really quickly would be very difficult to identify with a computer program. However, automating certain parts of your trading, like the entry, the exit, moving the stop loss, is usually pretty easy because it's mechanical and you can set some rules to it. So I'd highly recommend considering automating your exits. So you can enter the trade manually and then have an EA manage your exits. Another thing you can do is to use visualization exercises to practice staying in the trade until the take profit. And you'll have to do this over and over and over in order to create a habit, but it can be very effective. So what you're going to do is you're just going to sit down, you're going to close your eyes, you're going to calm yourself, you're going to breathe deeply, and then you're going to picture in your mind yourself opening a trade with a certain setup, whatever setup you're working on right now. And then visualize yourself putting in the take profit and then letting that trade run all the way to the take profit or to the stop loss, or however you manage a trade, right? What would be your ideal trade management for that setup? And you want to visualize that over and over and over again. Do it every day. Do it before you start trading. And that helps you change your behavior so that you'll do something that gives you an edge as opposed to taking your profit too early. The next common issue is missing good trade setups. So either you're too busy or you're not focusing or you're not checking the charts enough. So there are a couple things you can do here also. Number one, you can use things like MetaTrader indicators to send you an alert to your phone. Those are usually pretty easy to set up, and any programmer can create an alert setup for you as long as your conditions are programmable. The next thing you can do to not miss favorable trade setups is to set an alert. So let's say that you have a system that typically does well at the start of London or the start of New York or whatever it is, lunchtime at New York. You know, some systems use that. So what you can do is just set an alarm on your phone, have it repeat every day, and that'll get you into the habit of checking the charts at those times. And same thing with candle closes. So if you're missing trade setups because you let candle closes pass and you don't check the chart at a candle close, for example, at the end of the 4-hour close or at the end of the daily close, then again, set an alarm, set up a schedule, and that creates a habit. And going forward, you probably won't need that alarm anymore, but you'll already be in the habit so you can check the charts at the right time. Then the last reason why a lot of people miss trades is because they're hesitant. They see the trade setup, it looks good, it looks like what they tested, but then they don't enter the trade, and then they look at it later and they're like, oh, it worked out, right? That's the most frustrating thing in the world. So what you can do for that, again, is with visualization. You can visualize before you get started the setup, what you're gonna do, and just make that a habit so that your body and your mind are accustomed to taking the trade. What you can also do is practice in some sort of simulation software like Forex Tester, and that will give you the repetitive practice and the muscle memory to actually take the trade once you see that setup. And this is all basically just habituating yourself to taking the setup once you see it, and it's just a natural reaction, right? Set up, take it, set up, take it. So that's another way that you can stop missing profitable trades. All right, so probably the biggest reason why most traders are break even is because they have those one or two big trades every month that are losers. And this can come from a variety of different reasons, but usually it's because you're moving your stop or you're taking a position size that's way too big because you're trying to catch up on a loss. So there are a few things you can do here. Again, the visualization will help. You can also put a sticky note on your computer monitor to remind you not to do that certain thing that's causing the big losses. And you can also automate your entries so that you only take a certain amount of risk per entry. And if you have it automated that way, it's much less likely that you're going to move the stop loss or you're going to take a position size that's bigger than what you should be taking. A third big reason why break-even traders are break-even is because they are taking impulsive trades. So let's say they went out with their friends and they went drinking and they decide to do some trading afterwards, which is obviously not a good idea. So they take some impulsive trades, or they think they need to take more trades to make more money so that they can build their account faster so they can quit their job, right? That's a really common one. So they're going to be inclined to take impulsive trades and trades that don't have any testing behind them and they don't have a specific strategy. So the solutions to this one are basically what I spoke about before. You can have an EA that does the entries for you. That way you're not taking entries that are outside of your system. You can visualize your entries and your exits so that you know what you're looking for and you'll be better focused on what you're looking for. You can put a note on your monitor that says, I only trade these strategies. Another useful one is to open your trading journal before you start trading. And then before you take a trade, start filling out the journal and then have set trading strategies. So if you have an online journal or a downloadable software journal, then you can have a field that shows the strategy. And once you're taking that trade and you go to that field and you enter the strategy and you realize, oh, there's no strategy there, then you can say, okay, that's a way to catch myself and not take trades that are not in that list of trading strategies. Finally, and most importantly, review your psychology around the time that you take these trades that are not rated very well, ones or twos, right? So let's take a look at some of the emotions that can come up when you're trading. So I'm going to look at my notes here, but if you're exiting early, that's a sign of fear, right? So you need to overcome that fear. If you're staying in a trade too long, that's a sign of greed. You want to get more money when you should just take the profit that you tested. And if it hits your profit target, take it instead of taking off the profit target. There's going to be moving the stop, which causes big losses. And that's usually because you hope that things will turn around. But we're not into hope in trading. We're here to create high probability trading situations, and hope does not factor into that at all. The next one is going to be impulsive trading. So that's lack of focus, lack of discipline. So you're going to have to help yourself become more disciplined in taking trades that only fit into your system. And that can be done, as I mentioned, with some automation or visualization or just focusing on it and saying, hey, this is what I need to do, so let's do it. And the final one is not testing your trading strategy to begin with. And that's just because of laziness. You want to get rich quick. And this is not a get rich quick game. This is a skill. This is a demonstratable skill, just like any other thing, like becoming a doctor or a lawyer or whatever it is, right? You need to practice at it. And you're not going to get any practice if you don't train in the simulator or doing some back testing. So those are the 5 steps to go from break even to consistently profitable. And they're very simple steps, so they may be deceiving. However, it's not easy, right? Simple, but not easy. So you have to put in the work, you have to do it, but the rewards can be tremendous. So if you like this video, a thumbs up is always greatly appreciated. Subscribe and hit the bell to get more videos like this, and check out these videos that are coming up next.